when would you use it? Well, it's not a value trade, it's a structure trade. And the reason why it works is relatively straightforward. That's the concept of the tip. When we see a market driving, obviously the idea is we want to join the drive, but where do we join the drive? Well, a lot of times we'll see this, what is called a short covering rally. So obviously when we see a market dropping off from a breakout, for example, we see this price hitting maybe a measured move or a wholesale price, a big volume surge comes in, and we start seeing the price coming up here. The question I asked the guys in the room this morning was, who's buying? Who's buying this? Probably nobody, right? Probably the market maker, right? But the market maker's been buying all of it. The market maker's been buying the whole way down here. So it's not the market maker that's causing this to happen. There's obviously an aggregation to try and cause a rotation, but what normally causes this is what's called a short covering rally. Can you trap a short covering rally? Not really, because a short covering rally is people closing positions. So you can't trap closed positions, can you? So a short covering rally is people closing positions. So there's nobody trapped in it. They're getting out of positions. So this isn't going to be good enough. So normally when we hit these prices, of course, there's a short covering rally, which means, of course, that usually when like a target price, you would buy here, but that's not buy to get long, that's buy to close out your short. And then when the buyer does jam the price here, then of course what happens is that sometimes you see the short covering still coming in here and here and here. Now, in terms of technicals, what happens is that a lot of the times you start taking out like a candle reversal, maybe another price level. And what happens to the next phase of the move is that actual buyers come in because they've thought the bottom edge is now in, right? So a lot of buyers will come in here. And this is when the buyers appear, right? So we can draw the coffin at this stage. We love the bit of a little bit morbid, but we draw the coffins in here because these are the guys that are going to be getting buried sometime soon, right? So we'll draw the coffins coming in. So with these coffins, we're obviously starting to understand that these are new buyers. These are the guys that can get trapped, right? But where do these buyers, as a rule, start to get trapped? Usually when we go back through the tipping price. So we know that these guys are in place because the price doesn't just bounce a little bit. The price bounces past the halfback of the original move or towards the halfback, very close to the halfback. It doesn't have to be exact. It's not an exact science. So when it comes up to the halfback or thereabouts, this sell trade is now in place. This is now in place to deal. Because obviously what's going to happen is that this is where the first guy is going to have their stops, because obviously the first actual buyer is going to have their stops at break even by now, wouldn't they? Agreed? The first actual buyer is going to have their stops at break even. So that means that the main seller is going to start coming in around about here. These guys, well, they don't know this price. So these guys, this guy might have his stop at break even. This guy might be away down at the bottom edge like an absolute doof. So obviously what's going to happen is that the price then starts to roll around, starts to come back out, goes through the halfback, and it starts to pick up all of these longs. So these are net long positions. We'll call these guys the new longs. These guys will start throwing away their positions, and what as a rule will generally happen is the price will now press into the next move. Whether there's a commercial buyer here or not, it doesn't make any difference. We've still got the press into the next move. So when we consider that halfback trade, you'll see that we can add value to it as well. We had a brilliant example of that on the euro yen today. And price action can play its part, value can play its part. But here's the euro yen. Can everybody see the halfback press? There it is right there. Okay. The sell came in and it was a very fast money sell. So obviously when the price starts trading down into these areas, there's going to be profit taking. You're not guessing about the profit taking. You're seeing the profit taking because you still have to measure the halfback, right? So when I now have a bottom edge and the price starts rallying, I now come through the halfback here. So I know that around about this price, that there must be some net longs. Can you see where my profit takings are? They're before that price. Because what would be the point, seriously, of taking profits at this stage? That's stupidity. You've given away most of your money. So in the top half here, I'm more likely to be adding to a short than taking profits from my original short, because that, as I said, is just stupidity. So my profit takes are here and here, as we discussed this morning. And obviously, as the price hits the halfback, this opens the door to the halfback press here. So now we're going to be taking these buyers. These are the new buyers coming in. We're going to be taking those new buyers on to try and press the price into the bottom edges. A perfect example of that type of trade taking place. And the good thing about this trade is it has a setup. It has a very structured setup. So for example, if we took this away from value altogether, we weren't concerning ourselves with any value, you can see that you could have been selling that euro yen bottom edge quite a lot actually, couldn't you? Because obviously when you got that drop off from these areas here, you could have started to consider this and saying, well, you know, the top to the bottom there, it's literally right on the halfback here. So if it's literally right on the halfback here, now that it's hit that, if it goes through this price level here, I know that there's likely to be a press. There was. So you can see that you could have had another press opportunity in that situation just there, couldn't you? And obviously you made some really nice money on the press trade. When it goes through the halfback and goes all the way up, the press is off the table. Remember, it doesn't disregard value. The value should still be available for your trade, right? The value should still be available for your trade. So we're not just discounting value. We're still recognizing that perhaps the commercials won't buy the bottom edge to make this a good bit of business, right? So even though we see all these halfback trades, I mean, if you look at the high price there, the low price there, and then you get the break above the halfback here, and then you say, okay, well, a break above the halfback, I am now going to be selling, of course, into that move there. And obviously there's a commercial buyer here, which was us, but you can still see that the sell still made landfall at the bottom edge. Still made landfall at the bottom edge. And even this trade, new low price, new high price, there's the halfback there. So obviously the halfback press would be coming in from that point. You would now be able to look at this and say, right, after the halfback press, I'm going to sell here for the press into the bottom edge. And you'd have been able to get the press into the bottom edge again. Now, obviously, when the price goes through this price, there's no longer a halfback trade here, is there? You might want to buy the halfback trade here. You know, you might want to buy that trade, but it all depends whether the value's in the deal. So the reason why you wait for the halfback, of course, is to make sure that there are buyers, net longs, new longs in that trade that are going to get trapped. So you can obviously incorporate an order flow element to this. The more buyers that come in this phase here, the better. If there's no buyers, you might agree that there's maybe no new longs coming in. So that gives you an order flow dynamic to add to this as a process to help you make the right decision at that stage. So it's just a little trade idea, guys. Have a look at it, think about it, see if it's something that might fit in with your own trading styles. If not, chuck it in the bin. 2 minutes cash open, guys. 2 minutes cash open.